Hello, everybody. Thank you for joining us for our club lunch. Before we get started with our panel, I wanted to tell you, by the way, I'm Jody Schneider. I'm the president of the FCC and an editor at Bloomberg News here in Hong Kong. Please continue to finish your lunch. I know we're starting a little bit earlier than we said, but we have a very good panel, and we want to get lots of time for them to have their discussion and also for some Q&A. Before I introduce the panel and the panelists, I wanted to mention a few upcoming events. This evening, we have here in this very room, we'll be having Matt Murray, the editor-in-chief, the global editor-in-chief of the Wall Street Journal, who will be in conversation with me. We still have a few places left, so if you're looking for something interesting to do tonight and you haven't signed up, feel free. Next Tuesday, we'll have a conversation with motorcycle racing champion Michael Rudder and Peter Hickman in Bert's. That should be fun. And then we'll also have a book launch next Wednesday, the very next day, on Kashmir, Karachi, and the politics of Pakistan through the eyes of novelist Mohammed Hanif. So lots of things coming up. Sign up with our FCC concierge. But today's talk is on the digital standoff, the fight for tech supremacy between Silicon Valley and China. We're glad to see some of our California friends here with us today for this. And we're going to discuss today how obviously China's made huge technological strides over the past decade and is challenging the U.S. in areas where its dominance was long a given. We'll be discussing things like semiconductors, high-tech manufacturing, super-fast 3G networks, and also looking at the tariffs on Chinese exports and adding Huawei and other Chinese tech companies to the trade blacklist and what that's done. We'll discuss what's at stake as the standoff deepens, exploring the growing list of what could go wrong as this tech war looms. So our panelists are Stella Ji Xin, who's a founder and managing partner of Global Vision Capital. She splits her time between Beijing and her home in Silicon Wei. We have Wei Jiang, who's a founding partner of Momenters Ventures, which is an early stage venture fund based in Silicon Valley. Rebecca Fannin is the founder of Silicon Dragon and author of Tech Titans of China. She has some books here. She's a longtime journalist covering venture capital and China's entrepreneurial boom, reporting from Beijing, Shanghai, Hong Kong, and New York. And the panel will be moderated by my colleague, Shelley Banjo, who writes about technology and government policy for Bloomberg News here in Hong Kong, and she's a member of the professional committee here at the FCC. So I give you our panel.
Thanks, everyone, for coming. We'll have a discussion here, and then we'll open it up for questions. So start thinking about questions that you want to ask this panel. And I just want to thank you guys all for coming and set the scene for our audience a little bit. The folks on the stage here, they've all spent their careers working on this kind of cross-border promise of technology and how it can serve as a bridge between Silicon Valley, the US, and China. It's these ties that have given rise to big companies like Alibaba that were backed by venture capital firms listed on the US stock exchange. But it's also one reason why the US and China are locked in this trade war that we're in right now. Technology certainly underpins a lot of the tensions that are in the trade war. So I wanted to start with Wei and Stella. As venture capitalists with a lot of experience in cross-border deals and money flows, how have these ideas and this atmosphere kind of impacted the way you do business and your day-to-day lives? So maybe we'll start with Stella, and then we'll go to Wei.
I'd like to talk about two aspects. One is regarding the startup companies that we have invested, and so existing portfolio companies. And there are three outcomes with this tightening of the CFIUS policy. One kind, with this, one of our portfolios actually got sold right at the end of 2017. Yeah, and bought by a private conglomerate. And the second kind is they got suitors and very interested. Due to the 2018 policy from the CFIUS, the investors actually dropped out and the company has to think about other ways to exit, have to look for other potential suitors or go IPO.
And I'll just interrupt and just tell the audience, if you're not aware, CFIUS are these investment rules that the U.S. has, or the body that oversees these investment rules that the U.S. has regarding foreign investment into the U.S.
Right. A third kind would be, I know one of our VC friends' company actually was going through the process in the middle of that. The Chinese investor retreated from the deal, and they were not able to raise money fast enough. So this company is about to close down. So those three examples of existing portfolios. And of course, other portfolios are still here. They're raising money because the portfolios I invest are technology companies, and we're here to help them to expand the market in Greater China. Yeah. So some of these companies may have difficulties raising money. Some will continue to thrive. Yeah. There's another part is the new portfolios that we haven't invested, and you have seen startup companies either maintain in the U.S. and going to the rest of the world, not really coming to China, or some just they pack up and they move to Shanghai or Beijing or Shenzhen for the opportunities in China, and especially the teams that are Chinese nationals. A lot of them think about moving back to China. So these are for the portfolios.
So startups are actually having to make a choice. You either double down on the U.S. and the rest of the world ex-China, or you double down on China, but you can't really do both.
Not for the time being, yeah. But still, some startups are looking and waiting, but the sentiment mostly is not very optimistic.
And what about Wei, as you're working on your new fund, what are you finding?
Yeah, so from an investment point of view, if you are a Chinese investor or an investor out of a China-based fund, what I see is they have stopped making investments for the most part. So CFIUS reform bill was signed into law last August 2018, and then there was a pilot 3 months after. So ever since then, first you see the few months Chinese investment in the Silicon Valley has been slowed down, and then recently it's almost all come to a halt. So the Chinese investment has been fairly significant in the past few years. So a research institute called Rhodium estimated that in the 4 years leading to the CFIUS reform, there has been $10 billion invested in U.S. tech startups by mainland Chinese. So pretty significant. So if you're a Chinese investor, you have to, if you still want to invest in the Silicon Valley, in the startups, there's a process you follow, right? You file a 5-page report, and then you wait for 45 working days until you get approval or disapproval, or get sent back to the queue. Maybe you may also pay up to 1% of application fee. All these are pretty significant, right? It's very difficult for a fund to make investment with all these requirements. So on the other hand, if you are one more point to add to that. As an investor, now that I have my new fund, which is a U.S. fund, which I try to make it CFIUS compliant. The silver lining for me is the competition is reduced, right? In the past, every time I have a term sheet out, within a day, then somebody would beat me by 25%, 30%, right? So now I don't see that anymore. So on the entrepreneur side, let's say if you're a US-based company, you're the founder, sometimes you wonder, right? If I received money from Chinese investors, what I'm going to do? So earlier this year, there's 2 cases where they received the money before the new law was implemented. One case being Grindr, which is a LGBTQ community. So they had an investor from Beijing, and then so CFIUS asked them to liquidate, the Chinese investor to liquidate, even though the investment was made before the new law. So there's another case, similar treatment. For a Chinese entrepreneur, that comes to where the ladies were saying that you have to make a decision. You know, what do you want to do? Are you trying to do a U.S. business or a Chinese business? If it's a U.S. business, if you have a presence in the U.S., then you have to think about whether you want to take Chinese money or not. You know, you have to think about it. You know, your investor, Chinese investors, have to think about it. So these are some of the impact that I've seen.
So are people checking people's passports for proof?
I'm not sure, but they ask. So some of the my existing portfolio CEOs would ask me, "Are you a U.S. citizen?" You know, I didn't ask you, but I want to ask you now. So.
I want to get back to you, but I want Rebecca to put some of this in context for us, because Rebecca has been following this space for quite some time. Tell us what this world was like 5 years ago and how it was so much different than how it is now.
Okay. Well, 5 years ago, there was a lot of cross-border collaboration between China and Silicon Valley, and a number of startups resulted because of this cross-border capital and this innovation and this R&D. It was all very collaborative. Now it's breaking apart, and we're seeing these parallel universes develop in what's called now a term, splinternet. So this has happened just in the past 2 years. But before that, we had no stopping of China's rise, becoming much more innovating, becoming a developer of new business models, particularly in mobile, going global. Many new startups from China started going global. We saw the venture capital from China almost equal that of the US. We saw patent applications almost equal that of the US. We saw R&D spending almost equal that of the US. And this has been happening over just the past few years. Now, last year was a turning point. Because of these new regulations, the U.S. is pushing China back. And you could say that it's a red scare, right? The U.S. is now facing a global challenger for the first time in China. And this is because of China's rise in technology.
What is the U.S. afraid of?
Well, I think China, I mean, look, my first book, Silicon Dragon, came out in 2008. So I do have some perspective on this. And back then, the idea that there even could be a China Silicon Valley was ridiculous. You know, nobody believed that. But then they started believing it because we saw one example after another of new innovative business models coming from China. So I think today they are realize it's a wake-up call for the U.S. that, hey, we may actually lose our leadership because we don't have these kind of top-down directive policies that China has to push China forward. And China its ambition is really unstoppable. No matter what happens with the trade war or the tech war, China is on the go.
And what about talent? I wanted to ask all three of you guys, what happens to this kind of talent share, the engineers and others from China who come to the U.S. to study, and vice versa, American entrepreneurs who, you know, had dreams of working in China and, you know, getting access to the Chinese market as well? Who wants it?
You can nominate.
Stella, do you want to jump in there?
I think there's an ordinance that they wouldn't allow some of the Chinese students to go to the U.S. There's a limit for the visas. But then it got lifted. So we don't know where it's going for the Chinese students to learn in the U.S. But there have been a lot of graduates from great universities in America, and they work collaboratively with other engineers, you know, the Indians, the Iranians, the Americans, and the many others in the firms that we invest in. With the the age of the internet is actually the collaboration would be so helpful for the improvement and for innovations for the mankind. But with this limit and the limit of the exchanges, other than the students, there are also the professors, right? The exchange have been stopped, and I have talked to a few professors at Stanford, Chinese professors. They're so fearful. I was going to have them to be the advisor, but after all of this is happening, they said no. They said let's sit it for a while, right? So I think this stopping is not really beneficial to the U.S.
Yeah, and I would have to say, I'm going to add that many of the Chinese venture capital firms that I've been covering, they don't want to be known as a China firm anymore. They want to be known as a global firm because China there's a backlash against, a distrust, a growing distrust from the U.S. side of anything to do with China. And so China VC firms, don't call them China. You better call them global.
Look at me.
Well, you may be a case in point, Wei. You're now a U.S. Venture capitalist, right?
Right.
But you're proud of your heritage, so why do you need to hide it?
I am, but I still want to do business. But getting back to Shelley's point, the question, talent, right? So I feel, from what I see, the good Chinese students are still coming to the U.S., good schools for undergraduate and graduate degrees. So they're still attracting the top talents, especially technology talents. And then once they graduated, they still are looking for the jobs at Google, Facebook, Apple. And that would still be most people's number one choice if they want to get back to the industry. And then once they get to those top companies, they want to accumulate experience. And then some of them would just want to have a good life, right? Either stay in the U.S. Or come back to China. But a fraction of these guys, very small fraction, probably a single low percentage, would want to start a business someday. And because many of these people are overachievers in the first place. And then probably 20-30% or more would be thinking about at some point joining a startup, right? That's how they accumulate their wealth quickly. So for me, all these are good news because these people are the fertile ground for future entrepreneurs. So I try to do my best to stay close with these guys. To give you some numbers, so at Google, I used to do this math. So Google has 115,000 people, full-time employees.
When you were working at Google China?
So over globally, right? So I would estimate that 80,000 are in Silicon Valley. And then Google always has this rule that at least 50% of their employees must be technology people, product people, right? So we marketing lowlife. I used to be a chief marketing officer at Greater China. We were the second-class citizens, right? So, but the top-class, first-class citizens at least occupy 50% of the slots. And then so that takes the engineers and then scientists to 40,000 people. And then typically 1/3 of these guys are Chinese. So I used to invest in these guys either in the US or when they come back to China. That was my old focus. So now I have expanded my horizon to not just limited to Chinese. So.
And there's more in Facebook. And they feel more safe in Facebook because the wife of Zuckerberg is Chinese. So I know some people there that say, getting a lot of Chinese in Facebook.
Although Mark had recently taken a pretty tough stand, I think last week, right, to China. So.
Well, I want to talk about some of those practicalities. So we have two big Chinese tech firms that are in the process of trying to become public companies. One is ByteDance, the app company, and one is Megvii, which is a facial recognition company. Now, Megvii has now been blacklisted in the middle of an IPO process, been blacklisted by the U.S. government to not be allowed to buy American components. And there's similar talk of that around ByteDance. If you're a banker on that deal, or if you're a VC person in that realm, like, what are you supposed to do?
I imagine that's a big impact. So maybe looking for Hong Kong or domestic market to get listed. So
And it's even
Southeast Asia.
retroactive with the Musical.ly deal that ByteDance did. They're now looking at that, and that happened 2 years ago. So you're not even safe if your deal closed 2 years ago.
Musical.ly is a very interesting case. It was started by two Chinese founders, right? They have a presence, footprint in the Silicon Valley. So now that CFIUS can claim that that was a U.S. company, right? So ByteDance, did you go through the approval process, right, before you acquired it? So like I said earlier, the CFIUS law allows the CFIUS organization to go back to the past deals retroactively.
So what happens next? What happens a year from now? What are you guys doing practically in your own businesses?
Capital flows where opportunities are. The U.S., if they're closing up on us, we have to look elsewhere, right? So I started last year. I've been to Israel twice, went to Europe, Germany, the Nordic countries. I'm going to England and maybe a couple Eastern European companies, because what I love is to invest in great technology companies and then help them expand, to grow, regardless. It's sad for me, but I have to be prepared. I know people who were on this Nordic trip. He said he stopped since 2015 because he sensed that there may be tension going on. And others are yet to do the same. It's so sad. I think it's a loss for America. It's a loss for China, but maybe other countries could pick up. I went to these countries. They have great technologies. They're very modest, and they make projections that they can meet. You know, the Europeans, when they say, well, I do 10 million, and they do 12 million. I personally experienced that in my own portfolio. So if that great land doesn't take an investor like ours, I have to look elsewhere. It's not my choice. It's something I have to do.
Yeah, so to that point, it's a known fact to us that if you invest in Europe or Israel or Japan, the deals are much cheaper. That means valuation tends to be lower, and then U.S. is higher than that. China was even higher than U.S. That was last year. So this year, I don't know yet. But my answer to Shelley's question, I see three trends that continues or emerges. So one of them is I feel the Sino-U.S. competition, especially in commercial and technologies, will intensify, not lessen. So I'm not sure if they will expand into ideology / military competition. I hope not, right? But for sure, I see commercial and then the technology competitions intensify. So that's number one. Number two, I think to Rebecca's earlier point, I see innovation in China will continue. But innovation in China has always been with Chinese character, I guess. So one of the observation is, you don't see a lot of fundamental technology innovation, right? You see a lot of business model innovation. You see a lot of implementation, execution innovation. You see the speed of execution, right? The cleverness of it. But in the U.S., you still see big ideas coming out of U.S., right? Big technology, disruptive technology, even big business ideas. I don't think that tells me that the Chinese people are less innovative in technology or big ideas. I feel it's just once the social stability increases in China, they'll get there.
But wait, the bike sharing phenomena started in China, and so did the mobile commerce, the social
very
commerce.
True. That's very true. So I feel I'm not sure these are like disruptive or revolutionary ones, but yeah.
Set the world on fire.
No, I said I kick myself when I see a Mobike and a bike or a OFO. We invested in OFO, by the way, which is a sad story. I see it. I'm like, damn, why didn't I think about it? I was working at Google, and Google has all these bikes running around, right? But Google have the free bikes for employees. But you can easily think about a business model out of this, right? But I didn't, so how dumb of me. I feel, so the second thing is innovation will continue, but more on the business side in China. Yeah, business model.
But I want to add to your point. Actually, I have seen technologies spring out of China, here and there, very few, but it's coming up. As I said, the 5G company, a former fellow from Huawei, he actually had many patents, and the patents that he did made $1 billion for Huawei from the big international handset makers. So it's coming. It's,
They're
takes some
accepting.
time.
Well, I did mention TikTok as well, which is an innovation.
Yeah.
It may not be all that disruptive, but it definitely is
Business
taking
model.
a lot of attention
Yeah.
of consumers' time.
Yeah, they're so good. So, which actually lead to my third trend. I feel the synergy between U.S. and China is so significant, although they will become more and more opaque because there's a wall to be erected between the two countries, and then I feel the core part of the CFIUS reform bill is to protect U.S. technology and IP, right?
Yeah.
So it will be very hard to copy these things in the past. I don't think the Chinese entrepreneurs or others were trying to steal consciously of U.S. technologies. Sometimes they didn't know, right? The opening was just in the last 20 years or so, and some of them all of a sudden became successful. And then I can't tell you how many times some of these guys, fresh out of Wall Street after they ring the IPO bell, stop by Silicon Valley, and they would see me and say, look, next time you see a smart home deal, you let me know, right? I'll co-invest with you. Or next time you see a new energy deal, you let me know. So I think they didn't try to hide their intention, right? This is a strategic investment. So they wanted to get to know the new technology, the new company. If they want to learn from it, they'll learn it. Sometimes learning without permission. So if they need to license it, they'll be open to that too. So I feel there are a lot of stuff going on, some consciously, some unconsciously. So, but now people just lump them together, and many of them are IP violations.
And just picking up on the point that Stella made, I think definitely we're seeing this geographic diversity of China, U.S., and now China, Israel, China, Southeast Asia. And they're going into these new markets and taking some of the business ideas that worked in China, and some of the same firms are going in. So Alibaba and Tencent and Didi and ByteDance, they're taking their business models into Southeast Asia. And these are very promising markets that they can expand in, and they need to expand. So if the U.S. is not going to welcome them, they're going to turn elsewhere. Like Alibaba has done several deals in Israel recently since this whole CFIUS crackdown. Their deal to buy MoneyGram was squashed a few years ago in the U.S. And so Alibaba is now looking to Israel and has opened an R&D academy in Israel. So there's a lot of marriages between China and Israel, not just in society, but also in venture capital and technology.
That's a good point to just pause for a minute. I want to open it up to questions because this discussion is really interesting, and I want to hear what you guys think. If we could get some mics going around, and if anyone wants to ask a question, don't be shy. Oh, right over here.
Hi, thanks. My name is Joyce. I write for a publication called Wiki China. I have a question for Stella and Wei. So just want to know how concerned you are about the potential tightening of listing rule in the U.S., which are targeting Chinese companies. And these tightening might be seen in raising listing hurdles or checking their audits or just outright banning their IPOs. So given such prospect, just wonder whether you guys are recalibrating your the exit strategy of your existing portfolio companies.
Sure. So I think if U.S. decides to ban China-based companies to come to U.S. to IPO, that will be very devastating. I also feel borderline to irrational. Because going back to my earlier point, right, there's so much synergy between the two countries, two economies. So I hope it doesn't come to that. But if it does come to that, then I feel the Chinese company will have to find a way to go to domestic exchanges or go to Hong Kong. But I'm not sure the liquidity will be sufficient in Hong Kong stock market.
To follow up Wei's point, yes, definitely. All the portfolios we have, the U.S. companies, first of all, they have to abide by the U.S. laws, and they have to be very careful about any IP, right? Because some of the Chinese, they may not be aware. So we tell the portfolios be very, very, very cautious internally, have to train them more than before, right? Even though my co-investors are U.S.-based, but people probably was not aware of the situation, the seriousness of this. Now they're very careful about this, and so they need to look for other outlets, like Wei said. One is China. There's the STAR market for technology companies. There's a Hong Kong market for healthcare-related companies. There's also maybe Singapore and European may not have the multiples like in the U.S., right? But this is for specific portfolios. But I think China in general, there's not as much impact because there's only about 100 companies that are publicly listed in the U.S. And there's already a dozen companies that retreated from the U.S. market for one reason or another. And the total market cap for these companies are 50 billion only. And Alibaba took about 40 billion. So they have raised about 10 billion, right? So it's not a lot impact for China. But when people are fearful, I think it would be a loss to the U.S. To not have these great companies. Loss to both.
Yeah. There may be a crackdown too on having Chinese investors on the boards of these companies. That's another aspect of it.
We had a question over here. Oh, and would you mind just saying who you are and...
Yeah, hi. My name's Darryl West. I run IT for HSBC globally. I spend a lot of time in China, sort of sitting between all of this politics you're talking about, so I'm quite exposed to this on a daily basis. There's a theory around that the Chinese are just going to wait out till Trump is gone. Yeah? The theory is that this is only a temporary thing, right? Now, I spend a lot of time in the US as well. I have a big team in the US. My question to you is, do you think there's an underlying attitude shift in the US with the general population that's anti-Chinese? Or is it just the current administration's policy? Do we think that if Trump gets in, there's only another 4 years or so to go, 5 years, if it gets in, they'll wait it out and it will shift back to where it used to be under Obama? Or will it be, is this a fundamental change of mindset? Because if you watch the talk track of Trump and even the Democrats, I think they've figured out that being anti-Chinese is popular with the electorate, and they'll get more votes if they're anti-Chinese very publicly.
I think that's a bipartisan view. But Rebecca, you want to take
Well, I've
that?
listened to Democrats as well, and they're actually more anti-Chinese than Trump is. So I just think, do you think that's an underlying thing in the community in the US, or is it just a political thing to get votes?
I think it's becoming an underlying theme in the U.S. of distrust of China, skepticism toward China. They're stealing our good stuff, and it's time that we push back and defend our position. And I've been on the book tour in multiple locations in the U.S., and oftentimes at the end of a talk, the Chinese people will come up to me and say, thank you for telling at least a story that's at least neutral, because they feel like they're under attack, personally, Chinese in the U.S. And to me, that was rather amazing to see this, but it's happened several times to me now. And I think that it is really an underlying theme in the U.S., and it's not just Trump, it's the Congress as well. And I do think that it's becoming an electable kind of strategy to push back against China.
Can we get a mic over here?
Yeah, I just want to comment on that. David Kaufman, Nixon Peabody. I'm from San Francisco. So I think that I agree with Rebecca that politically there are challenges, but I think I just want to underscore the fact that people to people, I think America has a huge amount of Chinese Americans that are embedded in our culture. I think people talk about turning China into the new Russia, a new Cold War. I think I think just the demographics are going to make that more difficult. But I do think that there is bipartisan concern about technology, so high technology. I think if Democrats get in, there will be less on the tariff side. That will likely go away. It's amazing that Democrats are more free traders than Republicans are nowadays, but I think that's the case. But I do think it will be challenging for high technology in the IP protection for the time being. I mean, look, Chuck Schumer was the guy that wrote the letter that criticized TikTok. So I mean, it's not going to be smooth sailing if the Democrats get in. But I do think, long term, I think that the ties between the United States and China are very strong, people to people, personally, and so I think that will win out the day, and they will find a way for the groups and the countries to work together.
And what do you guys see with the entrepreneurs that you're talking to, the Chinese entrepreneurs in the U.S.? Do they echo that sentiment?
Yeah, I see some concerns. But I think in general, in the society, in the community, business community, I feel the tension has not been that bad. So there's still people interested in learning about what's happening in China. And so there are a few things they can learn from China, for some smart entrepreneurs. Some people acknowledge Chinese companies are their counterpart, may be leading in some sectors. So there's some learning going on still. But otherwise, like we said earlier, the law-induced concerns are real, are there.
And what about you, Stella?
I like David's points, talking about, I think people are people. If we know each other, we still have many friends with each other, right? For two great peoples. But for the entrepreneurs, the sentiment is quite pessimistic. So like I said, some people have to choose between the two hard places. It's very sad to see that.
What does that look like? Can you give us an example of a company that had to make that choice and kind of why they chose what they did?
I have some examples. So for the newer companies, sometimes they have teams in the U.S. and in China. By now they pretty much all come to this crossroad. They need to make a decision whether they are a U.S. company or a Chinese company. The implication is if you claim that you're a U.S. company, sometimes you don't have to, CPS does for you, then you better watch out when you raise capital from Chinese investors, right? Because those investors will have to go through the CPS process, which is not a trivial process. and then, or you don't go to Chinese capital, you just go to the U.S. Regular U.S. sources. So then they need to learn how to deal with them. For Chinese Americans, sometimes that's extra learning for them. But if you decided that you're a Chinese company, you better move everything back to China, because even a small footprint may qualify you as a U.S. company.
And do we have, lots of questions now. I'm going to go all the way in the back there, and then I'll do you guys.
Let me give you a contrarian point of view. There's a saying that China actually wants Trump to stay in office, because it depends on how you rip off the bandage, right? You can rip it off really hard and leave a scar, or you can rip it off slowly. This could potentially be the best time for China to sink in from a research point of view, from an innovation point of view, rather than from an execution excellence point of view, like what Wei has mentioned. So obviously, from a VC perspective, you're looking to make money from your portfolio of investments in the short term, hopefully. But research takes time. So China has spent great amount of government efforts to fund research and give tax incentives, give university fundings, et cetera, to come up with new innovative ideas or IPs. But that all takes time. I guess it's very similar to medicine as well as any area that requires deep research. Things may fail when you do an investment initially when you're doing research, and it will take a long time for the investment to come back. But once it comes back, it will be huge investments. So I think from my point of view, the question for the panelists is what's VC's point of view on any industry, let's say if you're targeting research, IP-based, and really what you believe China should become in the future. How do you look at your investment horizons if you're doing the angel round A, round Bs, that you don't necessarily have a very clear view that the company will be successful, for example?
Okay, I'll take the first step. I guess ideally for me, if people were rational, most of the time in history people are not. I see, I always see the synergy between the two economies. And then I would try very hard to leverage everybody's strength. Try not to make a parallel universe out of the two economies. And then, there are many issues that I do acknowledge, right? Intellectual theft and the forced technology transfer. And, heck, I used to work at eBay and Google in China, and I've seen some of the experience firsthand, some of the issues firsthand. But I feel like most of these issues are addressable, resolvable. There are probably better means to resolve these issues. Technically, whether they should hope for Trump to stay in office or not, I'm not sure this actually makes a fundamental difference. Maybe technically it is. It's going to, but to David's earlier point, the Democrats could be tougher, right? So Trump didn't really hardly ever mention ideology issues, right? So I agree with you on that. But if it has to be a parallel universe, China will have to develop some R&Ds fundamentally out of necessity, right? I'm not sure if these will be the top of the class because they may be developing themselves the technologies by themselves. So it's probably going back to 1970s, 1960s, right? So they'll survive. But I hope it doesn't come to that. There are a lot of synergies.
All right, we had a question. Can you just say also who you are? 1 second.
I'm a member here, Houghton Lee. Actually, a question for Rebecca. Something human touch about these subjects.
Yeah.
I'm sure you have interviewed a lot of the Silicon Valley non-Chinese engineers or businessmen who have cooperated with Chinese companies, or their company have been invested by Chinese investors who may even put some senior management or board member into the companies. What do they think or feel about working with Chinese? Do they usually have a very fond experience? Okay, I learned something, these people are good people, I earn good money, or I just be burnt, I don't want to do business with the Chinaman anymore. I mean, what is the general?
No, I think a lot of them went in
answer to
there
you?
for opportunistic reasons, just make money, right? Because they started going in during the dot-com bust when Silicon Valley was pretty much dead. So they started going in, the original pioneers. But now some of them made it and some didn't. And the core group, I think anyone who went over there was, you know, an explorer, an adventurer, a curiosity seeker, and maybe they did learn to love the Chinese and they did deals. Some worked out and some didn't. And what's happened today is that you have this core group of venture capitalists who are the survivors. It's a core group because several actually gave up. You know, it was just too hard, too far, too foreign. Took too much time to manage these companies, too risky, and even though they may have had an affinity with China, it was just too challenging to manage. And so now some of them, and they didn't get the performance that they needed, so some of them then just backtracked. For instance, Draper Fisher Jurvetson. Tim Draper was very keen on China, but you know, getting money out was an issue. So now he's not investing in China anymore. He's not the only one. There were several others that kind of gave up. But in my book, I outline a core group of venture capitalists who are the survivors and have gone on to run and raise successive funds and bigger ones like Sequoia Capital China. Even though I remember when Don Valentine of Sequoia told me that China was too far and too foreign to invest in. But well, he was wrong on that because when they put a team in place in China and gave Neil Shen the autonomy to the authority to do deals, he just went, expanded their team, and they have a tremendous performance. So, yeah, so that's a little bit of the history of it.
And I think, sorry, I just want to, I think he's asking about the rank and file people, if there's some sort of discrimination around Chinese people.
No, I don't see that. I mean, I think anyone who went in had an affinity with Chinese to begin with, or they wouldn't have gone in.
Just sorry to cut you off. I think we have time for just one more question back here.
Thank you. My name is Joey Fannin. I run an IT business in Hong Kong and Taiwan. My question is, the last week during the fourth plenary of the Communist Party, there was a push by President Xi for the blockchain technology. What do you think was the motivation behind this push to blockchain? And do you think it will trigger a new fever into blockchain startups and other innovation in China? Thank you.
Well, why not? No, definitely it could trigger a lot of innovation. Whoever gets the lead on that is going to trigger innovation. But yeah, Wei.
I have no idea what they're thinking, but I know they welcome blockchain technology. They're sensitive about coins or currency, right? So, but blockchain is a beautiful technology. I'm sure there are a lot of things they can do. One of my investment is called Blockstack. They try to design the Web 3.0. Brand new web architecture overcome a lot of the issues that we see today. One of the issues, of course, is Facebook, Google. Everybody can use their applications for free, but then they're collecting your data, they're monetizing your data. So people have realized that's the issue. So for technology such as blockchain to solve such issues, right? I think everybody should be okay, should welcome that. But I do think that currencies or coins would still be problematic.
Stella, do you have a view on that?
I think it's a good guidance because blockchain is the way of the future, right?
Yeah.
Great. Great. Well, thank you guys so much for coming and for the really insightful questions from our audience. And we have lots of different events at the FCC, so I hope you guys continue to come and support the club. Thank you.